Welcome to NPV. Impact, income, return.
Hey everybody, TMO here. Welcome to another episode of Net Present Value. This episode is kind of a side project, kind of a fun project for me. I call it the Impact and Investment Jam series, where I sit down with experts, entrepreneurs, other people that I know, like, and trust, and we just rap and we jam about different problems, different solutions, what's going on in their businesses, their lives, and we try and help each other solve those problems. It's kind of a how the sausage gets made, or a behind the scenes look at things. Hopefully it adds some value to you and what you're working on. And if you want to get some more info about the format and how we came up with it, you can go to compound.global/jam. Again, that's compound.global/jam, and it gives you the rundown of the different segments and how we kind of structure the show. If you would like to jam with me or have an idea for a guest or a topic, then just go ahead and text me at 970-618-4086. Again, 970-618-4086. Hope you enjoy. Thanks for listening. Today, I'm speaking with my buddy, Jimmy Atkinson. Jimmy runs, he'll tell us in a minute, but he runs OpportunityDB, which is one of the biggest Opportunity Zone informational sites and programs on the web. I would call him the leader in it. Jimmy, how you doing?
I'm doing well, Thomas. Thanks for having me. This is going to be fun, I think.
Yeah, no problem. Well, so basically, Jimmy, I'll start with the 2-minute drill. I'm gonna start my timer.
2 minutes.
My friends call me TMO. That's short for Thomas Morgan. I'm the founder, owner, operator of Atkinson Morgan Company, a national commercial investment real estate firm. We've done about $1.2 billion or so, a little more than that, of investment deals in over 40 states now. Been at this for almost 20 years at this point. Our two main projects are 1031 Navigator, which helps people do 1031 exchanges, find quality replacement properties, passive income properties, primarily triple net properties, high net worth investors, passive investors looking to defer those taxes. And then our other project we're working on now is compound.global, which is an impact investment company or firm. I also call it a studio, which helps people place their money into positive investments, impact investments, which are triple bottom line that help people, help the planet, and also produce some kind of profit or return. I'm based here in the Roaring Fork Valley, which is just outside of Aspen, Colorado. I have 2 awesome daughters, incredible wife, dogs, and we love living in the mountains, and super fortunate for the internet. I can work here and work with people all over the world, all over the country, and what's happened with COVID and the video conferencing and remote working. I basically have been doing that for 10 years or even longer. Since 2006, I haven't really even traveled much to most of the properties we work on. So this is kind of par for course for me, but excited other people can do the same.
2 minutes.
Okay, I'm up. Well, thanks again for having me on here today, Thomas. I'm Jimmy Atkinson. I am the founder of the Opportunity Zones database at OpportunityDB.com, the host of the Opportunity Zones podcast, and I'm also the co-founder of OZ Pros, which is an advisory firm that helps investors, real estate developers, and small business owners structure their own Opportunity Zone deals so they can take advantage of all the tax incentives. My background is in internet marketing. I've been doing internet marketing in one form or another for over 20 years, and search engine optimization is one of my top skills in that regard. Personally, I live these days in Fort Worth, Texas, with my wife and 2 small children, and I got a dog now too, just like you, Thomas. And I'm originally from Los Angeles, California, though, so go back and visit the family back there as often as I can. Not a bad place to go visit when the weather's nice out there, anyway. So that's a little bit about me, Thomas.
And now.
My now is, and that's why I'm excited to be speaking with Jimmy today. My now is similar. Still working on my main business, 1031 Navigator, and the brokerage, and helping people do 1031 exchanges into triple net properties. And I kind of call that my day job. But what I'm moving towards is full time with Compound Global, as I said, is impact investment studio. And the way we look at it is our role in the marketplace is to create, source, and manage impact investments that are institutional grade, but also a small investor could invest in as well. A lot of the pensions and endowments, whatnot, insurance companies, they can't write a check for smaller than 50 or 100 million. So what we're working on is structuring big investments that people can, those institutions can invest in, but then also, a Reg A plus offering, non-accredited or accredited investor can invest in as well. So excited to be speaking to you. There's the timer.
I heard that one.
It worked on that one.
Good work.
It worked.
And now.
Okay, thanks, Thomas. Yeah, nowadays I am working exclusively on opportunity zones, both in terms of educating about opportunity zones and at my advisory firm, OZ Pros, actually trying to put deals together and structure them legally and help raise capital. But what I'm working on right now at the moment is expanding my opportunity zone investing webinar series. We've had about a half dozen or so different webinars focused on opportunity zones, either different fund sponsors who get to come on and pitch their funds and go through their pitch decks with my network of investors, or we've also done some impact investing webinars as well, where a particular investor or group of investors talks about how they are creating impact with their investments. So that's what I'm working on right now is those webinar series.
At this time, I'm going to ask that you fasten your seatbelts.
So Jimmy, with what you said in your now segment, working on the opportunity zone and impact funds, or the impact investment side, the people you've seen, and it could be either, the developers, the sponsors, the tax attorneys, advisors, but also with your webinars, I think you actually are starting to get into investors, both institutional and private investors who have interest in opportunity zone investing.
Correct.
And I'm just curious, the way I kind of look at opportunity zones is you have the tax benefits and then you have the money benefits, that people are looking for higher returns, deferment of the tax, no capital gains on the back end. So it actually could push the IRR quite higher on certain projects. So one, tax; two, financial; and then three, the impact. The intent of the legislation was to actually help downtrodden or impoverished communities. And I'm just curious, with all the people you've talked to, what kind of order do you see those people, like what are they most interested in? Or are they interested in all three?
That's actually really interesting, because I ask this question on a lot of my webinars. I ask the question, what is your primary motivation for investing in opportunity zones? And I get a pretty wide variety of answers. Those are the three choices, though. It's the tax incentives, it's the ROI, or it's the social impact. And depending on exactly which audience I'm speaking to, we'll have one of those three come out on top, but it's not really clear who's really leading the way at this point. So I would say, I get answers for all three of those. Thomas, actually, if you give me a few minutes, I can actually look up the data and give you some hard data, but it might take me a few minutes to. And Thomas, what I'll do is, I don't have the data up in front of me right now, but I'll forward it on over to you. Maybe you can throw it up in the show notes for this episode.
So, so with that said, it sounds like it's across the board, though. So depending on whoever's perspective, if they're a tax attorney or CPA, they're probably looking at it from a tax, or if they're, high net worth trying to shelter some income, they're looking at it from a tax perspective. But then there's a lot of people who, were hungry for the returns. People were advertising 15 or 20, 25% IRR. So there's people who say, oh, I see those returns and that's what I want to invest in.
Right. And also remember that the biggest tax benefit of opportunity zone investing is on that back end, excluding appreciation, excluding liability on capital gains. And well, you only have capital gains if it is a good investment, right? And if it does produce high ROI. So it one kind of goes in hand with the other there.
And so that kind of leads to my next question, is because the third thing there is impact, or what's the social impact, what's the benefit to what I call the stakeholders or the community where the project is invested. Not just the shareholders, not just the participants, and investors, not just the sponsor of the deal, but who the project actually impacts. And something I've kind of struggled with over the last few years is I thought, okay, I'll lead with like social impact, and I'll lead with, positive messaging, and, kind of, this sounds cheesy, but save the environment, stop global warming, kind of all the feel good stuff that like maybe a nonprofit would maybe lead with. But I found that like, in my 1031 business, people buying, Firestone auto care centers or Dollar Generals or CVS, Walgreens, they don't care. I mean, they might in their philanthropic world, or maybe their, familial world, like care about like the environment and their kids and, social impact. But when it comes to their dollars and cents, they don't care. So, my main clients, it's a totally different group of people that I'm working with for Compound Global. And so I'm just curious, if you apply it to the Opportunity Zone program, like, I call that leading with impact, but my feeling is that doesn't work. And so I was wondering what your thoughts are.
Well, I think for a certain investor profile, it won't work. I think you're right about that. If you're looking at traditional market rate investors or a stock market investor, someone who needs appreciation, I don't know that will work necessarily. Right. I think it's a nice to have, right? It's, for those types of investors, for someone who's trying to grow their wealth, to be able to say, oh yeah, I'm an impact investor is a nice to have, but it's not really their primary motivation. So I might suggest, Thomas, that maybe you're looking, maybe the investors in your network just don't fit the profile of an impact investor. And I think that opportunity zones are kind of widening the net, so to speak, in terms of who an impact investor could be. But my suggestion to you there, Thomas, might be that you might want to look outside of your network and look for an investor who fits more of an impact profile, someone who is interested primarily in impact, whether it's social or environmental. Save the planet, like you said a few minutes ago. And there are investors like that out there, but I don't know if they're going to be the typical types of investors that you've become used to working with over the past 20 years or so that you've cultivated in your network. Does that make sense? You might have to kind of look outside of your network, I guess.
Yeah, no, like there's a lot of not a ton, but there's let's say a few family offices and a few high net worth investors who are obviously the leaders in the field, who they're leading with impact. The investment has to make sense, financially for them, but one of their main criteria is stakeholder attributes. And so I'm sitting there, okay, like, well, how, one of my goals with this, Jimmy, would be like to more mainstream, where basically this kind of investing it's not impact investing. It's just what investing is, where it's like the ESG investors, where people are, they're starting on the stocks to look at environmental and social and governance issues, and people are divesting out of negative impact investments. I'd like investing just to be where, okay, you minimize the negative or eliminate the negative. And then, but there's, like you said, nice to have, that's just an attribute of the investment. And so I'm saying, okay, like similar to what you said, okay, how do you broaden the net? And that kind of goes to our, you and I talked about it in the past, that I call it IIR, income, impact, and return. So you don't actually lead with impact, you lead with income, where, we all need income to live and to support our lifestyles and to make future investments. So I'm saying, okay, well, maybe that's the way. And that's my next question to you, is your thoughts on basically what you said, broadening the net. Okay, how do you bring other people in? How do you attract them to this field? Because I think with like the fires and the flooding and the hurricanes and everything, the social unrest, people are realizing like we can't just do capitalism as normal.
Yeah, I think there is some shift that's occurring with the investment community at large, where impact and the ESG component to investing is becoming more important and more prevalent. I don't know how much exactly the needle has moved on that, or how much farther the needle has to continue to move over the next several years or decades, but I suspect that it will continue to grow. As you say, I think what we've seen happen over the course of the last 100 years is that wealth has accumulated more and more into the hands of the richest of the rich, and right. In a certain sense, the tide has risen across the entire economy, whereas even the poorest of the poor much better off now than they were 100 years ago. But the disparity in wealth between the haves and the have-nots, between the haves and the have-nots, has grown wider. That gulf has grown much wider. So yeah, I get what you're saying. I think there is some sort of underlying current that is kind of tugging at the investment community to make ESG, to make impact investing, to make, for lack of a better term, income redistribution more prevalent in the private markets, I suppose. Yeah, also, getting back to your point about, widening the net, I think Opportunity Zones has done that to a certain extent. And I hear this from the impact investing community, different stakeholders there who have been doing impact investing for a long time. I've heard that, the impact investors were impact investors, and it was kind of a really small silo for a really long time. And the Opportunity Zones incentive is but one of many programs that has, in a way, kind of widened that net, because now you have market rate investors who are interested in, getting a high return, but also reaping some huge tax benefits. They're kind of almost accidentally becoming impact investors in a way, if they can find the right deal, the right project that has an impact component to it, as many Opportunity Zone deals do. Just by very nature of their location, they're going to be investing in a place that is, for the most part, been overlooked, right? So that in and of itself will provide some impact, not in all funds, I recognize, but in many of the funds and many of the projects that are ongoing. Sorry, I cut you off there, Thomas. Where were you going to go next there?
No, I think what you're saying right there, Jimmy. I use the term, the deal speaks for itself. And so, like market rate investors, they come for the returns and stay for the impact.
That's right.
They see the project on the surface. They say, okay, I have capital gains. I'm going to move money from the stock market. I'm going to get some income. I'm targeting a high IRR. I'm going to get some tax benefits. But heck, look at that beautiful building we just rehabbed, or look what we're doing to that end of town. Like other people are investing. Going to raise like you said, raise the tide for the community. All of a sudden, the community is just a nicer place.
Exactly, it's a nicer place. Hopefully, you've spurred some job creation, because I think that's the single most important component to social impact. Is, are you creating jobs for the local residents, for the local economy there? I like that saying. I think I'm going to modify it slightly to be: come for the returns, stay for the tax benefits and the impact.
Right. Yeah.
But you're absolutely right. You have to have, at least as an Opportunity Zone investor, unless you are purely impact driven, the investment only makes sense if the returns are good.
So that's the struggle I've found is, I think there's just a small handful of people that are, I'm not in that group where, it's where they're wealthy enough where they can just invest with impact in mind. We all want to pass wealth on to our kids. We want to take care of our families while we're alive, whatnot.
Right.
So at a certain point, it's like, well, if I can invest in a project at 15% IRR, or invest in a 3%, or 5% impact project, my age, my investor profile, what am I going to do?
Right.
The answer is obvious. So, but going back to your point about like the wealth inequality or the income gap, and it kind of goes to spreading that net. I kind of say, okay, like, how do you make investments that, they're institutional in nature, so the high net worth people and institutions can invest in, but how can someone in the community invest in as well? Because like the wealth inequality, the have-nots, let's say, or let's say middle class, they're not going to grow. Their income, their net worth isn't going to grow unless they have access to certain types of investments, and they don't necessarily care about impact because they're still at the level where they just want to improve their own lives. I think that's just human nature.
Yeah, no, I agree. There's nothing wrong with that. They absolutely should be leaning that direction. That's one of the knocks on the Opportunity Zone program, actually, is that it, being that it's a capital gain incentive and that the only monies eligible for the tax benefits are recognized capital gains. Well, who has capital gains? It's the wealthiest of the wealthy.
Right.
Typically, it's people with large gains from whether it's from real estate or stocks or any other type of appreciated asset. It does kind of lock out the the middle class or the or below the middle class from actually investing their own dollars into Opportunity Zone projects while being eligible for the tax benefits. So that's one knock against the program, and it is a fair criticism of the program. I think the hope is that the wealthiest, or at least the policy intent is that it's effectively a form of income redistribution where the wealthiest recognize their capital gains from the stock market or real estate or any other type of appreciated asset, and then they pour those gains that were otherwise just sitting on the sideline into these downtrodden communities, and then that lifts the economies of those communities and improves the lives of the residents living there, the middle class or lower, the have-nots as we were referring to them. That's my thought there.
And so this is an example of, it's yet to be determined, but it's an example of the policy potentially working, where it's actually the incentive was enough. And it kind of goes back to you and I are both marketers. So if we're trying to attract certain types of clients or investors, okay, what's the incentive? Like, why do people come to our investments or our whatever we're trying to market? And then two, on impact investing, what's the benefit for the community or for the people? But that's something I'd struggle with is, okay, what do you lead with? Do you lead with tax benefits? Do you lead with income? Do you lead with high rates of return? My feeling is that leading with impact doesn't work as much as I'd like it to work. It just, there's something in human nature where it doesn't.
Yeah. So for me, for the opportunity zones, I lead with the tax benefits. I think that's what really sets apart this type of investment vehicle from everything else. Is I refer to this as the greatest tax incentive ever created, or the tax incentive of a lifetime, or at least of a generation. I mean, the ability to wipe out capital gains when you dispose of the asset after a holding period of 10 years, that's incredible. I mean, can you imagine if Google had been formed as a qualified opportunity zone business and you could have gotten in when it first started up, and then you sell it all those years later for enormous capital gains and you owe no tax on it? That's really powerful. That is what gets investors' eyes to light up.
Excited, yeah.
Taxpayers' eyes to light up. I mean, that's what got me excited about it when I first heard of this program more than 2 years ago now, when it was first just starting to roll out. I heard it and I'm like, whoa, no capital gains. That sounds incredible. So that's what I guess that's kind of the bait that reels you in, right?
Well, it's weird. There's Planet Money. They did a replay of something they had done a few years ago, where an economist had studied the price of water versus the price of diamonds. And so, like, water obviously is something we all need, and have to live. And diamonds we don't. But why the heck are diamonds always so expensive in any market? I came away with that. I didn't quite still understand it, but it's something in human nature where we like the shiny object, we like the luxury, we like the something that's nice, or I call the returns, or like, let's say the tax benefits. I call that kind of the shiny object of. And so that's what I'm wondering, and I think that's helpful. It's like, really, what's the shiny object to lead with, and then you say all the other stuff, like to coin your term, is all the other stuff is nice to have.
I think well, at least with opportunity zones, the shiny object is the tax benefit, just because it's so different and it's new, and it really is a really nice set of tax benefits that investors have access to. And then I would say, the only thing that makes the tax benefits worthwhile is the return. And then probably tertiary for most people is the impact it's doing. So it's almost kind of like you're, for lack of a better term, you're tricking people into making impact investments in some ways, right? Or you're getting them to make impact investments accidentally. But it only works if the returns are good, and you only get them in the first place if because of the tax benefits. By the way, I'm speaking now purely for opportunity zones. This is my deal for opportunity zones only. That very specific type of investment vehicle.
Like you just mentioned, like tricking. Like I don't think that I'm not disagreeing, but it's kind of like you lead with something and then they get the other benefits, and you're not tricking them because they're not hiding anything. But it's like I kind of I'm not a huge fisherman, but I've fished my whole life. And, you always say, okay, what fish are you going after? What bait are you going to use? And something I started doing here, and fly fishermen have been doing it for a long time, is called a dropper, where they actually, they have a dry fly at the top of the water and a wet fly or a nymph below the water. So there's two baits, so it actually increases your odds, but there's two, the fish, we catch and release here. So we're not killing the fish, Jimmy, but but it's like increases your odds of attracting the fish. And there's two options. And, in this case, a fish isn't going to eat both of them. But like I think from an investment perspective, if you're using the right bait, and let's say you're using a dropper for an impact investment, if you say, or an opportunity zone investment, you say you have three baits. You have tax benefits, income, rate of return, IRR, and then you have impact. So people can kind of pick and choose what's most important to them.
Yeah, I think that's a pretty good analogy there, a pretty good metaphor. I don't disagree. I'm gonna go back and repeat something I said earlier. I do think, at least with opportunity zones specifically, the tax benefit is the bait that I lead with most often, because that's the thing that really sets it apart, like I said earlier. But I like your fishing bait metaphor. It's an apt one.
The last question I wanted to ask you, Jimmy, was, I have obviously more questions, but I'm trying to keep it concise here. Your webinars, if you could just explain to me what you've learned so far and whether or not you think they're a good, bait per se. If my target audience is high net worth investors and or institutional investors who are, looking for one of the three things, tax benefits or income or impact, like how does the webinars factored into your kind of marketing funnel?
Yeah, so admittedly, I'm still trying to figure that out a little bit, and I have kind of developed I guess I've developed like three separate webinars. One is educational, purely educational, where my partners and my colleagues and I will discuss a specific topic and how it relates to opportunity zones or how it relates to investing or entrepreneurship. One of the first ones we did, in fact, I think it may have been the first one we did back in, maybe it was April, we did a summary of the first coronavirus relief bill and how it can apply to different businesses. We spent like an hour unpacking, the very first draft, basically, of the PPP and the EIDL grants, and that was all like really new stuff. And I don't know that it was even necessarily like specific to opportunity zones, but I just knew that we had a lot of investors and opportunity zone participants on the call in the Zoom meeting that were interested in hearing more about that. So I do a fair amount of just educational topics like that, and that kind of my podcast is an extension of that as well, right, where I try to educate people. But then the two main webinar series that I'm focused on that are not purely educational. One is an impact investing webinar series where we've had a different impact investing expert on every week. And we speak specifically about impact, what that means in terms of job creation and lifting people out of poverty, et cetera. And then the other one that I do is the Opportunity Zone Investing Series, where I actually allow fund managers who are looking to raise capital to present their pitch decks to my network of investors. And that one has actually worked out quite well. And that's a paid opportunity that I generate revenue for. The fund sponsor pays me a flat fee for the ability to be able to reach out to my network. And I create a really nice piece of more or less evergreen content for them that they can then distribute however they like. They can use the recording of the video on their YouTube channel or share it to their social media channels or on their website or to their email list. And I also require registration on the other side for the webinar attendees. It's free, but we do require some information, name, email address, a little bit about your investment profile, and then all of those leads then get passed along to the fund sponsor. So in some cases, I've generated hundreds of pretty quality leads for these fund sponsors, and I'm really proud to say that the first one I did a couple months ago. It's been long enough now that we've actually been able to attribute some real checks being written, some investment dollars being raised, directly attributable to having those attendees watch the pitch webinar. So that's really cool that I have a little testimonial from him. Sam Hales, who's a fund manager at Saratoga Group, was kind enough to provide me with his feedback and give me a lot of transparency into his investors and the checks that he had received because of my webinar. So that's really nice to see that it's not just a fluffy piece of content. It's actually very lead generation oriented, very investor generation oriented, and the fact that I've had some success with it so far in the short time is pretty encouraging. So I'm going to try to roll that out a lot more. That's, I guess, that getting back to my what I'm doing now. That's the one thing I'm focused on more now is doing more of those types of webinars.
And do you have like demographics on, or do you know like age groups? Like, you know, a lot of people like don't know what a webinar is still. And like, I had one client actually, you know, he participated in a multifamily webinar, and I was actually, he's like 70 years, you know, almost 70. And he said, I'm doing this webinar. And I was like, I was totally blown back. I was like, oh my goodness. Like I didn't know people, you know, did that.
Yeah. I don't collect too much demographic information. I'll get your location. So actually, sometimes we ask for location, sometimes we don't. And I ask what your approximate investment amount is and whether or not you're an accredited investor. That's pretty much the extent of it, though. Just questions that a typical investment fund manager may want to know.
Cool. And you're just recording basically a Zoom call, and then you're just, you know, it's a topic or it's a question you're answering, you and the guest are
Correct.
answering, and then that becomes audio. It's also video, obviously.
Correct.
And then people can watch it real time, or they get a recording if they can't make the real time.
That's right. Yeah. So what I found in my experience is, if I get 300 people to pre-register for the event, you'll usually get a little bit less than half of that number show up. So I might get like 125, 130 people to show up for the live webinar, the live event. And then, I suspect that a lot of them end up watching the recording afterwards. I email all of them afterwards with the link to the recording, whether they watched it live or not. But some of the benefits to attending live are you get to see, you get to participate in some of the poll questions that I ask, and you also get to participate in the Q&A. So if you have a specific question for the expert or the fund sponsor hand, you get a chance to actually ask him or her a question. And if I like the question enough, I'll pose it to the fund sponsor. We unfortunately, sometimes we get so many questions that we're not able to get them all answered, but I do my best to at least forward all of those on, and hopefully they get answered within a couple of days. They'll get some sort of response from, if not me, from the presenter.
Cool. And so there's some incentive there for them to show up live.
Yes.
And participate, and maybe get to answer a question. What about after, Jimmy? And this is my last question. What about after? Do you still keep it behind like a contact wall, or not a paywall, but or after a month goes by, do you post it on YouTube and just free forever?
I actually, I posted on YouTube the next day, so it's no longer behind a wall. I still continue to throw traffic at the registration page, but I'll also promote the YouTube page to the people who have already registered, and it's public too. So if you subscribe to my YouTube channel, you'll find it. It'll also appear in the Google search results page if you search for the right terms, or the YouTube search result page if you search for the right term.
Right.
If you do a search for 4 Points Funding OpportunityDB webinar, you'll probably that'll just pop up. I don't know why anybody would do that search, but yeah,
it's evergreen content. So basically, It's gonna someone could find it 6 months or a year from now, however long, and it's still applicable, and they could still contact 4 Points.
That's right. That's right.
Sam. Yeah.
Yep. And
for you,
I guess I'm kind of hedging a little bit, right? I kind of struggle with that sometimes, knowing if I should. Because there are 2 versions of the recording, as you've kind of alluded to. There's the one on YouTube, which is free, no registration required. And there's the one through the platform I use is Zoom. You've probably heard of it in the last few months. And going through that platform requires registration. So it's a little bit more of a hurdle for the viewer. It's not as simple as just clicking on a YouTube video. You actually are registering to watch the on-demand version. And I guess it's a little bit goofy that I have both versions available. And like I said, I promote the different versions to the different groups of people based on whether or not they've already registered for the event.
Wait a minute. When you say different versions, so one is the Zoom version, and what's the other one?
Right. Oh, well, by the way, the recordings themselves are identical. They're just on different platforms, right?
So
one of them is on YouTube.
And...
one of them's on YouTube. No registration required. Everybody knows you just click a YouTube video and you get to watch it. Maybe there's ads, right?
Okay.
So maybe that's a little bit annoying, I guess. Maybe I should start promoting it as that. The ad-free version is on Zoom, but you have to register. You have to give me your name, your email address, your approximate investment amount, and we usually ask one or two other questions that the fund sponsor or the other presenter wants to know the answers to. So those are the two webinar recording versions that I market after the event. And again, the YouTube version I'll market or I'll promote to the list of people who I know have already registered for the event and may have already watched it, or maybe they registered but missed it. And then I'll try to promote the Zoom platform version to everyone else, to my general email list, people who probably haven't watched it yet. So what that does is it continues to generate leads over time.
Oh, so the recording actually still sits on Zoom after you do it live.
It still sits on Zoom, and it still sits behind the registration page.
Oh, okay.
And it still continues to ask you name, email address. Yeah. And it'll say, it's very obvious. If you go to one of my old, my previous webinars that have already been recorded, it'll say, this is the on-demand version. This is pre-recorded. This is from such and such date. What's the exact language? It says the webinar has ended. Register to watch this recording on demand. Name, email address. Are you an accredited investor? What's your approximate investment amount? A couple other questions. And then I continue to pass that lead information on to, the presenter or the sponsor.
And when you are marketing all this across your channels, do you use the word webinar, or do you lead with interview series or?
I use webinar. I've struggled with that a little bit because I feel like over the course of the last 6 months, there's a little bit of fatigue with the word webinar and with the concept of a webinar. I think everybody was super excited about working remotely and catching all the webinars back in March and April. And then as we drag into May and June and July and August, and now it's September, it's like, oh man, I don't know how many more of these webinars I can watch. So I've been thinking about playing with that term a little bit. But I do still think it's probably, it is what it is. It is a webinar. So, I've played with the term webcast. I don't know if that really matters that much anymore or not, though, to be honest with you.
That's good food for thought.
I'm worried that people are getting burned out on webinars in general.
Yeah. The term kind of seems, boring, or you hear it too much. Like, it's not related to your topic by any means, but just webinar, where I actually like the word, webcast, or even like live event. But in terms of search engine juice or SEO, I don't know.
Yeah.
We'd have to do some research and figure out if that's what people are searching for.
Yeah, I don't know that I'm thinking on the on my YouTube page, I think the video titles themselves don't have the word webinar in it at all. I think it's just the topic.
Okay.
So like for instance, the one that I did with 4 Points Funding, the title is Finding Uncommon Value in Untapped Markets with 4 Points Funding. And then in the description, it'll say live webinar record. Yeah, exactly. It's a descriptive title. It doesn't say that it's a webinar or not. It's a video, right? Because it's on YouTube.
Right.
That's pretty obvious. I don't need to say video webinar.
And maybe that's just it. Maybe you don't even say, initially maybe you advertise it as a webinar to get sign-ups because people know to sign up. But then later you don't, obviously you don't say a video is a video.
Yeah. Well, and now on my email list, I do, right? So I have a weekly email newsletter that I send out to my email list. And, with that one, I do have a section that, every week, and the section will say, I think it says something to the effect of, previously recorded webinars or on-demand webinars, because it's a text-only format, my email. So it needs to be clear that, these are webinars. So it depends.
Right, okay.
I guess the context will determine how you label it or how you brand it.
Yeah, but it sounds like in summary, it's been a great lead magnet or evergreen content generation tool that you can, that adds value to the investor or the listener or the viewer. But then it also provides value to the fund sponsor and you.
It has, yeah. And you know what? It's interesting you bring up the term lead magnet. I actually haven't really been using these webinars as lead magnets yet. I think there was one webinar I did out of my OZ Pros advisory firm. We put on a joint video presentation with CrowdCreate, which is a digital marketing agency focused on targeted investor outreach and capital raising. We put on a joint webinar several months back now that was titled "How to Raise Opportunity Zone Capital," I think, or something to that effect. And that one, yeah, here it is: How to Raise Capital for Your OZ Deals. That one I actually did put on a little squeeze page or landing page, and it is, it has become a lead magnet specifically for me, for my email list. I guess you're right. The other ones are a lead magnet or a formal lead magnet for the fund sponsors that I'm still generating some leads for on the on-demand versions. You're right.
Cool. Well, all your answers have been super helpful. I mean, I could ask you more questions, but I want to turn it over.
Yeah, man, we can. You and I could probably talk about this honestly for at least 4 more hours. I think, and really diving into the weeds. I could. Stuff, but...
Yeah, no, I could go. I'd love to go into pay per click and SEO and lead magnets and paywalls or funnels. I mean, there's a whole deal. Yeah,
we can spend all day doing that. Okay, let's do it. All right, so Thomas, let's flip the tables here and let's jam. And I'm looking at the your draft outline of this format, this podcast or whatever this is format. And we're on to part 3 now. I just finished my part 3, and now your part 3. Jam 1 to 5 problems that I'm trying to solve or things I'm thinking about, and I want your help with. So one thing that I am struggling with within both of my Opportunity Zone businesses is I've got, theoretically, there's the need for a marketplace out there, right? There are a lot of people with Opportunity Zone deals who are looking for capital, or they're looking they're looking for capital. And then on the other side, you have investors with capital gains, and particularly as we approach the end of the year and we kind of run up against the year-end deadline that is the deadline for many investors in terms of being able to roll over their capital gains into funds and be eligible for the tax advantages of Opportunity Zone investing this year. My struggle is to match up those two different parties, people with gains who are just learning about Opportunity Zones, and then on the other side, people with deals, whether it's real estate projects in an Opportunity Zone, or maybe they already have a qualified opportunity fund set up. Maybe it's a multi-asset deal. Maybe they're a business owner or entrepreneur with a business in an Opportunity Zone, and they're looking to capitalize it. What are your thoughts, Thomas, on how the heck do I match up those two parties, and also how can I get paid for it? I'm not a licensed broker dealer, and so I'm not able to receive a fee based on or a transactional fee, not legally anyway. And I don't want to get in trouble with anybody. So I've tried to find some creative ways to do it so it's all legal. But what are your thoughts on how I can best match up those two types of people?
Those are great questions. I think almost anyone in the capital raising business or real estate business, syndication, sponsorship, runs into it. I think the first thing that sticks out is the timing of it because of the legislation. With what I know about Opportunity Zones and what you just mentioned with the end of the year deadline. Like if you didn't have the time limit, then I would say, with what I know about you and your tech background and the ability to put together websites and program and find the right programmers, like I would say, do a portal and or even get a white label portal. There's I can't remember. There's Crowd Engine. I think there's a couple different ones where you can actually white label where your sponsors you're working with post their deals, their documents, whatnot, and then you're doing basically the marketing, the front end of inbound investors because you have so much content and breadth of reach with your podcast and your email list, YouTube, whatnot. So if you didn't have a time limit, I would say do that. Like and then you figure out how you get compensated on the back end. But I would say the other way, I think your model, considering the time limit, if you don't have time to do a white label or do something custom, you just continue to market and actually go to your sponsors and say, okay, what deal specifically or what thematic set of deals do you need to raise money for? and then just build content. And you're more of like a content company or a media company rather than like a broker. Obviously, like you said, you need licensing, or we'd be a broker dealer to get compensation on it. So considering the time crunch, I would just say, okay, we're a content company, make custom content for the sponsors, and then somehow drive. Like let's say the sponsor has their own white label, or let's say they're on CrowdStreet, or I'm gonna butcher some of the names here, but like Realty Mogul, or the crowdfunding sites where people still post their own deals, and then the website provides those services. Like Fundrise, posts their own deals now, so they're not. Right. I don't think they're taking deals from other developers and syndicators. But if you actually drive traffic to their, I know a lot of developers and syndicators already have that. They have that vault set up. They have the accreditation, screening set up. They have all the PPM documents and the ability to accept funds. And so I don't think you need to duplicate that. I mean, you could. I think that'd be a really great. You could actually white label. I can get you the name. I think it's CrowdEngine. There's a couple other ones, but I think you could actually white label that stuff and help sponsors do that themselves. But I think for the time being, with the end of the year deadline, just drive them leads and either charge per lead, which you and I've talked about in the past. That's harder to do, but I think just a set fee of like per deal, or maybe you have different packages where you say, look, we'll do a podcast, we'll do a webinar, we'll do email newsletter, like you have a gold, silver, and premium package, something like that, where they get a certain amount of content that you help them create. Like you said, you had a piece for the one guy, you gave him kind of a showpiece that he can take and share with his list.
Right. And I am doing a lot of what you mentioned to a certain extent, right? I do have a lead gen platform that different fund sponsors have been on, where I just charge a flat fee per lead based on, different criteria that you can set. What's your fund's investment minimum? Do you require that the investor be accredited? Usually, yes. So I'll filter for those and only charge for the leads that qualify based on the criteria that you give me. And that's worked to some extent. I've also charged for advertising, display advertising, and podcast advertising. I've charged for email newsletter sponsorship. I've charged for the ability to send out a dedicated email blast to my list, which is over 12,000 Opportunity Zone participants now at this point, which is great. What else have I charged for? Oh, I'm starting to charge for the webinars as well. The ability to pitch your fund to my network of investors. But yeah, I'm always looking for new ways to monetize the site and to help people raise capital through the channels that I can offer. I like the idea of a portal, and it's something that I come to time and again. At the moment, I guess I have a really bare bones portal. It's more of a directory. In fact, I think I do refer to it as a directory. It's really just a directory of all of the Opportunity Zone funds that I've been able to find. I've got a few hundred funds on there, and it's neat because you can screen it for different criteria based on investment location or minimums or fund capacity. How much is the fund looking to raise? The type of assets that the fund is investing in. So you can, if you just want to see Opportunity Zone funds that are investing in business, I've got a business filter. Maybe you don't care about business. Maybe you just want to see real estate deals. And then within real estate, you can select by property type too. Affordable housing, multifamily, commercial, industrial, parking, etc. So there's a lot of different options there. But yeah, I don't have anything that's like a CrowdEngine or Realty Mogul or Fundrise portal where you invest directly through, kind of like a crowdfunding portal almost is what you're talking about. I
think that going back to some of the things you just said, you could tier your services, and obviously you're doing that, where you say email blast has this much exposure, this is the cost.
Right.
Webinar has this much exposure, this is the cost. And there's a third tier. You could, like CrowdEngine, you could have your own white label, and then like for the sponsors that don't even realize they can do that, they're still doing it the old-fashioned way, with like printed documents or email. CrowdEngine, you could add that as a service for them.
Yeah, no, that's a good thought for sure. That kind of gets me over into my advisory firm business a little bit too, right? Because again, just to revisit what I said during my intro, I actually have two different opportunity zone related businesses. One side is OpportunityDB.com, and that's my media company essentially, where it's content generation and advertising revenue, lead generation. That's where I do my podcast out of. It's where I do my fund pitch webinars out of, or my investing series webinars out of. That's one side, and that's the business I first started in the opportunity zone space more than 2 years ago now. My other business, my newer business, which is less than a year old, is OZ Pros, because I saw that there was a need in the market to service some lower end clients that couldn't afford the big, New York City or Chicago or
Right. Yep.
Washington, D.C. legal fees to get their opportunity zone funds structured and set up. My business partner there, Ashley Tyson, who is an opportunity zone attorney and consultant out of Charlotte, North Carolina, we created a product that allows for a very quick and simple entity formation, where we can establish your legal opportunity zone business and opportunity zone fund entities for you within a matter of days. It's pretty boilerplate, which drives the cost down. So we actually do warn people that if your deal is at all complicated, if it's not just a self-funded deal, particularly if you're going to raise capital from outside investors, we have higher levels of service that we can add on, but we still come in well under the fees that some of the larger legal and accounting firms would charge for this type of work throughout the country. And if you have a particularly large deal, we actually do work with those with some of those more expensive firms.
Bigger firms.
We help bring them in. But there was that lower end of the market. Somebody with a self-funded $1 million deal. Maybe they had $1 million capital gain, or maybe it's even just a few $100,000 capital gain, and they had a real estate project that they wanted to invest in, but they wanted to take advantage of the opportunity zone tax incentives. They're a perfect client for us because we can get them set up pretty quickly. And if they're not raising outside capital, like I said before, it's really easy to get going. Now, if you are raising outside capital, maybe your fund's still on the smaller side, I think we're a good value as well, and we can get you plugged in with some of our attorney partners who can generate the PPMs and subscription agreements for you. We help create pitch decks as well, and then with our partnership with the firm that I mentioned before, CrowdCreate, we also do targeted investor outreach and can help you land some investors. And then we actually contract back in my first company, OpportunityDB, to do some webinars and some podcasts with you as well. So I've got we're trying to do a lot right now.
A couple of points on that, like on the OZ Pros. You and I had talked about in the past, and I run into this. I just had the conversation last week with a guy on one of the, I'm selling an 11-year triple net deal leased to DaVita, but it has some vacant space in it. And the guy, it's in an opportunity zone. The guy wanted to figure out how to do opportunity zone funding. And I said, well, you could, rehab part of the building, qualify for substantial improvement. And he didn't know that. He's like, well, I thought I had to invest in a qualified opportunity fund. And I said, no, you can actually self-elect. And I think that service or even just information about that people can self-elect, so like on the small side.
Right. But by the way, technically he's correct. He does have to invest in a qualified opportunity fund, but he can create that fund himself, is what you're saying. When you say
and they don't know that. Yeah, exactly. They're like, well, who's going to create the fund for me? So then that's where someone like me could send them to you.
Correct. Yeah. So if you ever have anybody like that, we would gladly talk to them. And we've helped set up, dozens of those, self-elected, smaller type. I call them self-funded opportunity zone funds, where it's just you, or maybe it's you and one or two other business partners. You're not really raising outside capital. You just need a fund quickly set up so you can actually have the vehicle that makes you eligible for the tax benefits.
Two other points to your first question.
Yeah, fire away. Go ahead.
And you had mentioned a few weeks ago, the number one is, I think, your pitch day, or like a pitch series.
Yes.
Like if you I think your setup is like matchmaker. I mean, you're perfectly positioned as a media company to okay, you're attracting investors who are interested in opportunity zone investment, then you're attracting accountants, tax lawyers, developers, sponsors, whatnot, who have the deals. And so all you have to do is tweak the content and position it correctly, and you can match make all day long. I think your pitch day if you pick the topic, one day is like let's say next week, or whatever, one day is affordable housing, day two is, industrial or self-storage or some other kind of property type. Day three is venture capital investing, or business investing. And then you segment, and then you have the sponsors pitch,
Right.
and they compete for, why is their, deal better than the other guy's deal?
Right. So so let's get into that a little bit, because I did want to ask you for some of your thoughts on that. By the way, I think what you're proposing is a little bit too ambitious. I would start with a 1-day event, or maybe even just a half-day event. I was talking with my wife about it a few nights ago. I was telling her about the idea, and she said, "That's too long. Who wants to be on a Zoom call for 8 hours?" And I maybe she had a point there. So maybe even like an all-day event is a little bit of a struggle to get people to pay attention for that long. But I will say this, two things to counter that point about it being too long. One, if you're an investor with capital gains and your window is running out, let's say I do this event in November and your window is therefore running out within the next 45 or so days, you are highly motivated, I think, to sit on an all-day Zoom call to see as many opportunity zone funds, to get pitched as many opportunity zone funds as possible, right?
Yep.
And then the other counterpoint to that is, I would segment it out, within the day, right? So, maybe from, this is just an example, maybe from 11 a.m. to 12:30 p.m. we've got hotel deals, and then from 1 p.m. to 3 p.m. we've got multifamily residential deals in primary markets, and then maybe later afternoon we're talking about secondary and tertiary markets. I'm not exactly sure how I would segment it out, but I would be sure to provide that schedule to the list of attendees in advance, so they don't actually have to sit on the whole call for the 8 hours if they don't want to. I think plenty of them would still, because they want to see everything, but some investors may only be interested in, okay, I just want to make sure that I'm there for this 2-hour block where he's talking with these 4 fund sponsors, or something like that, where those fund sponsors' investment theses align with his goals.
And I think from a content perspective, that helps you group it together. If you're spending a half day on affordable housing,
right?
You're just mixing and matching or mismatching affordable housing content. And you can create tons of stuff from that.
And what do you think about the format? So here's my proposed format, and then I want you to pick it apart and make it better. So my proposed format is this, and I am going to assume right now that I'm going to do a full day event, and it's going to be virtual, right? There's not going to be an in-person component. Maybe next year it would be in person, but this year,
why is there something going on this year?
There's something going on this year. Yeah, I would love to be able to do in person, but kind of two things.
I'm joking. Yeah,
no, I know, but in a way, there's a silver lining there, right? Because it allows me to test the proof of concept without like sinking a ton of money. This is going to be dirt cheap to put on, right? I'm paying, a couple $100 a month for like a premium Zoom account, and that's it. I don't have to worry about reserving a block of hotel rooms or reserving conference space or any of that stuff. I'd love to be able to have that problem next year if this year works well, but this year it'll really help keep my costs down because everything's closed due to the pandemic.
Right.
So here's my proposed format, Thomas, and I want you to see if you can pick this apart and improve it. I think I'll start in the morning with like 1 hour will just be like Opportunity Zones 101. So, hey, you can skip it if you know your stuff already, if you've been listening to my podcast for over a year, right? But maybe you just heard about Opportunity Zones yesterday or a week ago, or even just a month ago, and you really want a refresher course on how the heck this all works. So like the first hour will be maybe 1 or 2 presentations on just Opportunity Zone 101. After that, we'll just dive into all of the fund pitches the rest of the day. And what I'm thinking is I'm going to line up a different fund sponsor to pitch his fund in maybe 15 to 20 minute blocks. So pretty, not lightning fast pitches. I'd say just kind of like maybe just like regular length, maybe a little bit on the shorter side pitches, or at least shorter than I'm used to. Because typically for my webinars, I'm giving the fund sponsor at least a half an hour to pitch, and then I've got a little bit of intro and interruptions, and then we usually have about 20 minutes for questions at the end. It's a full hour. So this would be a little bit more quickly done, 15 to 20 minutes of pitching, and then you're done. and then I just bring in the next guy, and then we have breaks, every hour or so for a few minutes to let people catch their breath. But there's no, I don't know that I want to have 3 fund sponsors on a panel all pitching against each other in any sort of competitive event. I don't know if that would be the way to go or not. I'm leaning toward no on that. I'm leaning toward just having each fund sponsor have their own allotted time. But what are your thoughts?
I think one on the intro is great because it's no sweat off your back.
Right.
You already know how to do it. You've done it a million times. Like, it's super easy for you to do that. And
right.
But I think there's value.
And you could skip it too and just come for the start with hour 2 if you want to, right?
Yeah, exactly. Yeah, and I agree with you on I don't think you want to have a panel of like 3 people or even 2 people or 4 people, because it's hard to get stuff done. There's too many people talking. It goes too long. People
right.
Can't really make their point. And I think at the end of the day, people are going to vote with their money. I mean, if someone's on the call and they have $250,000, okay, what do I do with it? Who do I invest in? They're going to, and I agree with your point that if someone's motivated, they're going to spend, all day watching an event. I have people that call me and they're like, Thomas, I've listened to every single one of your 1031 exchange podcast episodes. And I'm like, gee whiz. Like, that's like, that's crazy. I'm like, I can't listen to myself talk that long.
You only do because you have to, right?
Yeah, exactly.
Yeah.
But I think someone would sit there all day long, because that's a big financial decision for them. They want to make sure they pick the right person.
Yeah.
And then what they're going to do, they're going to say, well, I actually like, speaker number 2 and speaker number 6. And so I'll call them or I'll sign up for an intro call with them. So you give all those fund sponsors a call to action at the end.
Well, and I do that. I make sure that the fund sponsors who do my webinars, that they have a call to action at the end. And actually, you'd be surprised that a lot of them have to be told that. They'll usually send me their pitch deck in advance, and oftentimes there will be a call to action at the end, or at least an email address. But sometimes there's not, and I'll have to tell them. So, what's your call to action? You want these people to take that next step. They've just listened to you. You've just listened to you and me talk for an hour. Now you got to tell them, okay, if you're interested in learning more, click here. If you're interested in receiving, maybe if you're interested in downloading this pitch deck, or if you're interested in downloading the extended version of this pitch deck with all of our financial projections, click here, or click here to sign up for our investor portal, or click here to schedule a call. There's got to be something, some action that the investor can take. You got to tell them what to do next. And I'm going to make sure that, if I do put on this pitch day event, I'm going to make sure that that's dialed in with every single one of the presenters that day, because otherwise you're losing a lot of value.
Yep, I agree. I mean, I think that's a great idea, Jimmy. I think a pitch deck or pitch day, where people can actually compare apples to apples. If they, I like your shorter format too, because like if I'll find that article. There's a local co-working place here that raised $1,250,000 one night just from co-working pitches of like incubators in the valley that I live in. And I think they did a really short, I think it was like 5 or 10 minutes per pitch. And then there was a Q&A. I actually think Q&A is super powerful. You let people talk, do their pitch for 5 minutes or 10 minutes and then do Q&A, like, kind of like what we're doing you do that for
so maybe that's it then. Maybe I give everybody 20 minutes and you can use the 20 minutes however you want. So if you want to pitch for the whole 20 minutes and not take any Q&A, that's your choice. But I might recommend that, hey, why don't you just pitch for 5 or 10 minutes and then take Q&A for the rest of it? That might be the way to go about it too. Because I do agree, the Q&A is really valuable because you get questions that you may not have been expecting as a fund sponsor, and can help you tighten up your pitches in the future. And then, the people who are the people asking the questions, they're the people who are the most engaged, who are most likely to write a check. So if you can give them a satisfactory answer, you can give them, first of all, the opportunity to ask a question. And then second of all, if you can give them a satisfactory answer, I think that's really powerful for both parties, right? For the investor and for the fund sponsor, for the presenter.
I think in terms of personality also, it plays to people who are good, I guess building a trust and rapport, helps them, actually answer those questions and, help people invest with them, where, someone who's a more strong presenter, or a structured presenter would do better in the other format, like, just 15, 20 minutes straight. But I like your idea of, give the presenter the option, but just encourage the Q&A.
Yeah. So, but do you think 15, 20 minutes too long, too short, or is it a good amount, you think?
I would say, kind of what we just tested. I think 10 minutes is probably too short for both. I think 10 minutes for pitch and 10 minutes Q&A is good. And then just set a hard stop at 30 minutes, or let's say 25 minutes. That gives you 5 minutes to, switch to the next person. So if you gave them 25 minutes total with their call to action, and they have to figure out, okay, like how long am I going to speak for? How long am I going to allow Q&A?
Yeah.
And I need to do a call to action, and then you build in 5 minutes for just overages or going to the next person. You're kind of working in 30-minute blocks, less than 30-minute blocks.
Right. So if I'm just doing some back of napkin math right now. If I allow like 20 to 25 minutes per presenter, that's basically that kind of works out to about 2 per hour. If you structure in some breaks also. That would be pretty comfortable for 2 per hour. And then, if it's an all day event, maybe I'm getting in about a dozen or 14 presenters throughout the course of the day. Yeah. If I do the OZ 101 intro, and then I do 7 hours of pitches after that, then that's a good 8-hour event. I think that could work out nicely. So I think that's kind of along the lines I'm thinking.
Yeah. The other thing you could do, Jimmy, is break that up. Like after one, I would probably group it together, like, affordable housing, VC, so group the speakers together. So if someone wanted to just invest
I would ideally, I will be able to do that. I will be able to do, like you mentioned, affordable housing, or, just class A multifamily, or, I'm not exactly sure how I would segment it, but I would try to pick out some sort of primary and secondary theme from each fund sponsor's investment, and then group them accordingly, and try to create, little cohorts, I guess, or segments or blocks, right? So, hey, if you're interested in XYZ, you're going to want to be there between 10 a.m. and noon, like I said before. Yeah, we're on the same page there. I think that makes sense.
Just an idea I thought of is to give yourself as a presenter a break, or to break the day up, or morning up.
Yeah.
You could even pre-record something where you say, you do your intro to opportunity zones, you do an hour of fund pitches, and then you do 30 minutes of like some other kind of educational piece. I mean, it could even be a piece of content you've already have used, and you just hit the play button. So you could, it's like the political conventions, it's like, it's already recorded, and then you do a Q&A at the end or something where, you can take a break, you can deal with other stuff.
Yeah. And then Thomas, what do you think would be like the best fee structure for this, for me to monetize this? Cause at the end of the day, this is a business for myself. This is my primary source of income. So I got to make some money off of this endeavor. So a couple of things that I'm thinking of is, I would charge a fee to the fund sponsor for the ability to present. Now, typically I'll charge a fee for an hour-long webinar. So this is a little bit of a different beast. It's only like a 20 to 25 minute block. At the same time, I'm hoping that, if I get a couple months lead time to build up momentum for this event, that I would actually get a lot more investors in the room, and they'd be more motivated too, theoretically, because they're coming to an all day event, and it's getting toward the end of their window. So, maybe I can charge a similar amount or a little bit more, even though the pitch itself is shorter. I think it may provide more value for the fund sponsor. But so let's talk about the fund sponsor fee for a second. Should that be a flat fee that's arranged in advance? Should it be based on the number of leads that I'm able to generate for them? And what is that? Is that the number of people who registered for the entire event? Or is it the number of people who were live in the room while they were pitching? Or, can I get paid on a performance fee based on transactions, based on investments that are then made over the next few weeks? And I think the answer to that one is no, because I'm not registered broker dealer, unfortunately. And man, I keep having this thought in my head. I gotta just go out and get that, just make that happen, so I can actually start.
I'm wondering if there's
a
way for you to actually work with a broker dealer, like if for example, if like you went to if you just took a survey of all your fund sponsors and say, okay, which broker dealers are you working with? And I'm sure there's one or two that probably work with multiple, And then, let's say there's 5 that work with most, that cover 70% of your sponsors.
Mhm.
Maybe you go to them and say, is there any way I can, if I run money through you pay me a referral fee. So I'm maybe talking on a turn here with securities licensing and whatnot.
Oh yeah, well, we would have to. I don't know. That to me sounds like that might have its own set of legal issues. I think you need to have a securities attorney on the podcast at some point. Thomas, we can ask him these questions. I'm just going to say I do not think I'm going to do a performance based payment just because it's just loaded with legal issues. I think ideally like that would be the way to go. But it's loaded with legal issues, and it's a little bit difficult to track too, right? So I think I'm probably going to do either on a per lead or just a flat fee. But what are your thoughts there?
Well, I think the bigger money is is in the performance based or some kind of participation, like you and I have talked about.
Yeah. Agreed.
But I think but then you're relying too much on the sponsor's product, their development deal or whatever they're pitching. And 2, you're relying too much on their funnel, their conversion process, whatnot. So I actually think you could still go like a 2-tiered thing. It's not based on performance of them and getting investments, but you could say, hey, look, we're going to charge a base fee for you just to show up. Every single fund sponsor is charging the same, or they're all getting charged the same. I don't know if it's $250, $500, whatever. But then if you get so many views, you could actually add a performance-based thing where if you really feel confident that your list is, super into multifamily, let's say, and you set a threshold of like, well, if I break this, 300 participant threshold,
right,
then I get a bonus,
right,
something like that.
Right. Yeah, I'll have to think about that. But yeah, those are kind of along the lines of some different fee structures that I've considered. A flat fee based on, X number of people in the room. And if we get more or fewer than that, then we settle up later. So something to that effect. But and the way I've done it in the past is I've just done a flat fee, and I've told them, here's how many people that I expect will attend the webinar, or I'll usually just present some sort of range. Like I typically will get somewhere between 100 to 200 people to register, and we'll get about half of that number in the room. Here's what it's going to cost. It's a flat fee. I make my I in good faith make my best attempt that I can to get as many people as I can in the room. And here are the channels that I do it through. And they understand that, I can't guarantee anything, right? But they have reasonable expectations, I think. So as long as I set the expectations at a reasonable level and I'm able to hit those expectations, I think what I'm leaning toward is just a flat fee for everybody. And then my second question, though, Thomas, regarding monetization is, should I charge the investors to attend? And my initial thought is no, I should not. I'd like to make this free for investors, or potentially I would have 2 different tiers. I would have, are you an accredited investor with a certain minimum investment amount? Do you have at least, and I don't know what that is, do you have at least $100,000 to invest, or at least $250,000 to invest? Maybe, I don't know what the threshold would be, but something like that. And if you meet those minimums, it would be free for you. But if not, if you're not an investor, or if you don't have sizable capital gains, maybe I would charge you a small nominal fee. I've seen different events structure it like that in the past. Actually, I think one event I've seen structured in the past is, are you an individual investor or an RIA or an institutional investor? And if you're an individual investor, they charge you, but they really want to entice the wealth advisors, the RIAs, and the institutional money to come, so they don't charge them. I don't know. What are your thoughts on that, if you have any?
I just go back to, in a world of YouTube and podcasts where basically everything and anything is free.
Yep.
I think that's why the newspapers struggle so much, or premium video content providers struggle so much, is like, it's, if you have to pull your debit card out, or, it just creates a barrier, and everyone's busy, and everyone's like, oh, well, I have to actually pay for this. Like I just think it's just hard to do that. I mean, I agree with what you're saying. You could have tiers of like individual investor, if someone has more capital, then they're free. But I think if you just make it free for everybody, because you're going to get other benefit. I mean, you're going to own, if you get the right content license, you own all the content.
Yep.
You can just repurpose all that, do other stuff with it. It just helps you grow your whole network. I mean, there's a huge benefit for you of like all the different topics. I mean, it's positioning you as the expert. And then the fund sponsors are the one who want something. I mean, yeah, the investors want something, but I feel like they have tons of options that are free. I mean, they can go peruse investments all day long. And if once they get on someone's list, someone's going to be calling them. And then whoever's the pushiest salesperson is going to make the sale. So they don't need to go pay $35 or $50, whatever it is, $100
Right.
to watch a webinar.
Yeah, and I was thinking somewhere in that price range, something like a fairly nominal fee, like $25 to $50. That seems to be the going rate for some of the different Opportunity Zone events that I've seen that have gone virtual over the past 6 months or so. The in-person events can cost a lot more, but it's really tough to charge very much for a Zoom call, essentially, right? For an 8-hour Netflix video, essentially, is what you're getting. So I do think I'm creating a lot of value here by getting a lot of high quality fund sponsors in the same place on the same day, potentially. But I think you're right. I think I am leaning toward just making it free for everyone. Don't quote me on that though. So if you're listening to this afterwards and I am charging, I've thought of a very good reason for it. But I think I am leaning toward it'll be free for attendees. But I will charge the event sponsors, the people who are able to present. I'll charge them some sort of flat fee.
I mean, another perspective is that the investors who, a lot of the investors I work with, time is their most valuable asset. I mean, even though they have a lot of capital. And so from their perspective is like, they're already investing their time. If they're going to even spend an hour or let's say, half a day, that's like, they're already doing
that's even more valuable than the $50, right?
Yeah, exactly.
That's a really good point. Yeah, that's a really good point too. So some more questions for you, Thomas. I have a pretty sizable email list of Opportunity Zone participants, but I'm wondering if I can expand my reach a little bit more. Do you have investors that I could reach out to, or that you can reach out to on my behalf to invite them to an event like this? Or are there other places where I can find investors that could attend? Because I think I've got a pretty good handle on getting enough fund sponsors in the room to pitch, but I'd really like to it'd be great if I could get like 1,000 investors to register for this event. Because then, like I said before, only about half of them end up showing up for the live event anyway, typically on a typical webinar. This is a little bit of a different beast because it's an all day thing. But what are your thoughts? Would you invite your list, and should I consider offering some sort of a referral payment or referral bonus or maybe some other goodwill gesture or favor to people who are able to send attendees my way?
Yeah. So one,
I wouldn't be able to pay like a revenue share, I guess, because it's a free event. We've just decided. So,
right.
But yeah, go ahead.
One, I think, our relationship has always been kind of reciprocal. We like kind of what we're doing here. We share different ideas and different values. So one, I'd be willing to do it just, some kind of just reciprocal value just to help you out.
Well, thanks, man.
Yeah. No problem. And then two, if you wanted me to take it further, I could, we could actually do some sort of like content or like even maybe like an advertorial where we don't, we just do an episode, like a short episode, like 5-10 minutes that just talks about the event and why you're doing it. And then, make it its own thing. So it goes out to my list and on my channels. And then I could even put it on the 1031 podcast as well. The other thing, I could post it on like the CCIM forum or in the broker list forum for you. Like, so that I'd have to kind of go out of my way to do. And then I would end up getting a lot of questions from other CCIMs and brokers, but I'd be willing to do that. And, that to me, that I think to answer your question about like, I would call it like an affiliate program. Like, I think if instead of revenue sharing where you say, hey, look, if you can just market it to your list or, maybe you just have a set amount you're willing to pay. It's, like you weigh that versus pay-per-click ads, or other kind of marketing versus someone who's already in the space who could help you, do that.
No, that's a good thought. Well, I appreciate all your help that you would provide for me. That's great. I definitely owe you a big one after that. If you can drive some investors my way, that would be tremendous. I'll think about the best way to reach out outside my network beyond just you also. But creating some sort of program, maybe it is just a dollar spend. Maybe I just have to incentivize people to an affiliate program, essentially, like you mentioned. And yeah, if any of the listeners have any thoughts for me,
I mean, I think if you went
love to
back
hear
to
them
all
as well.
your, I think if you went back to all your previous guests and
Yep.
said, and find out who, I'm sure you know, but like who has podcasts now, who has a YouTube channel,
Yep.
and just say, hey, look, Rick, like that's what all the guys do on, gals do on their book launches. They've been on podcasts for their first book, and then 3 years later, they've written a new book, so they just call them up, and then when that person has a book, they go back on the other person's podcast.
Yep.
And they're not. I don't think there's paying. I think it's more just like audience. Like a lot of people say, we're selling attention these days. Like, that's attention is the most expensive thing. So
yeah, time and attention. You're right. Yeah, we were just talking about that a few minutes ago too, right?
Yep.
That's why that's part of the reason why you were able to persuade me to not charge investors to attend this thing, because they're already giving me their time and attention.
Have you checked out AngelList? Have you heard about their new rolling fund?
No.
So I don't know
about that.
So AngelList is VC, kind of tech incubator, tech startup focused, and they have a new product.
I've seen AngelList before. I think I'm on it actually. I think I've been on it for like a decade. I don't do anything on there, but I have a profile on there.
Yeah,
so
but they have a new thing, like a rolling fund, which is kind of
okay.
So instead of like raising a normal fund where you spend 6 months to 18 months fundraising, and then the fund closes, and then it's actually operating for 4 years or 10 years or whatever. The rolling fund it's basically a quarterly. The way I understand it, it's like a quarterly rolling, so people can keep investing in the fund.
Okay,
and it's always open.
It's more like an open-end mutual fund almost.
Yeah, and I think like listening to them talk about like the tech incubator, and then using the tech investments they do, and then like you made the example of Google. If you invested in Google a long time ago, and it was in an opportunity zone, or let's say Apple or Tesla had a battery company that was in an opportunity zone fund, and they're 10 years from now it's gone 2,000%. Like man, like think about like I think there's a whole market. Like a lot of the opportunity zone stuff is based on real estate. I mean, there's a giant market for the
man. Yeah, you're preaching to the choir, and I bring this up on my podcast episode all the time. Like, real estate's great, but you're not going to get a 2,000% appreciation on a real estate project. You're not going to get like that 200x or that 1,000x like you could with business, though. I mean, you start up a business in an opportunity zone, and maybe you've got like an accelerator, right? Like that's the concept that some people have focused on is, let's set up an accelerator in an opportunity zone, and we'll like seed fund, a dozen or a few dozen businesses, and most of them will fail. But maybe you've got one unicorn and a couple of home runs in the bunch. I mean, that's a huge ROI, and it's all capital gains free, right? I mean, if you're in the accelerator space or in the startup space, like why would you ever not set up your next startup or accelerator in an opportunity zone? There's no reason why you shouldn't.
Yeah, absolutely. I mean, it's like, or these tech companies.
There are some reasons why you shouldn't, but I think there's a better reason why you should.
Yeah. No, I agree. Considering people can work remotely.
Yeah, exactly. Because the reward is just so high on the back end.
Yeah. Well, I think that'd be a good look for your pitch day, adding that to your repertoire of not just real estate focused,
Yeah, no, you're right about that. Yeah, I do want to have some business fund investors or business fund sponsors on there, and I know a handful of them, so for sure. Good thoughts. Definitely good thoughts. I think that's all I got for you. Let's go to the next one. Yeah, I'll ask you first, Thomas. So this is the one thing segment. What's the one thing that you or your business want to be known for, or wish people knew about you or your business?
What's funny is I came up with the question, but I haven't even really thought too much of the answer. I would, it actually goes back to one of the things, we talked about on the original podcast we did on your podcast is I'd like to, 10 years from now, have raised the biggest impact fund that, that basically every single investment creates a financial return, but also is known for its social and environmental impact of how it changed the world and helped investors.
That's pretty good. That's a good one. And then for me, I would say the one thing that I want to be known for is I want to be known for the go-to place for, I guess I want to be an Opportunity Zones clearinghouse, essentially the go-to place for both investors and fund sponsors or deal sponsors to meet, to learn more about Opportunity Zones, and to actually drive capital into the Opportunity Zone communities. I want to help facilitate all of that.
I mean, I think you're well on your way. I mean, I call you, the leader in this space already.
Thank you.
And I think there's still more runway in the program.
There's a lot more runway. Yeah.
Yeah. Okay, cool. And Jimmy, where's the one place people could connect with you or learn more about you?
Yeah, so I have a lead magnet, of course. I've got a free guide, the free beginner's guide to Opportunity Zones. If you want to learn more about Opportunity Zones, I want you to head over to OpportunityDB.com/download, and you can click the Get Your Guide button. And when you do so, you'll get on my email list, and you'll be able to start receiving my weekly email newsletter on Opportunity Zones and be notified of all my upcoming events and webinars. And it's the best way to get in touch with me personally as well. So if you have a question for me, you can just respond to any of the follow-up emails that you'll get after downloading that guide, and it comes directly to me personally. So that's the best way to get me, I would say.
Okay, cool. And for me, the best place right now is all of our investments that we're working on are invite only. So it's compound.global/invite, and you can sign up for exclusive content and early notices on some of the things we're getting ready to put out. So
very cool. Well, hey, Thomas, this has been fun. We should do it again sometime.
Yeah, man, I like it.
Today's show is brought to you by Compound Global. Compound Global is an impact investment studio that creates, sources, and manages impact investments worldwide. Compound Global specializes in real assets that produce triple bottom line returns. Their inclusive institutional-grade investments are open to investors both big and small. Get your private invite at compound.global/invite.